All right, good day, traders. Today we're going to take a look at an equity play in the real estate sector called Simon Property Group, or SPG. And we found a high probability seasonal trade that calls to get long on or around the 20th of November that has been profitable 85% of the time over the last 26 years. So that is a lot of data that is taken into account. 85% of the time over 26 years, and it's a bullish trade. So using our smart seasonal software, you can see what your equity curve would have looked like if you only traded 100 shares of this stock by buying on the suggested start date and closing on the suggested end date every year for the last 26 years. Got a very nice looking equity curve, or equity graph. Let's go to a chart of SPG and see what the technicals are telling us. So here we have a monthly chart on SPG. I've got some key levels or key zones marked up. What do these levels or zones signify? Basically, these are key zones where we've had price has caused new lows or new highs, or thus created trend changes or turning points in the market. So right here, all the way back in 08, see that on this monthly chart, this bar took out these lows, thus changing that trend from up to down. And then here in 09, this is an area that caused a break in the trend from down to up, keying off of this area, trading as high as 220, 230 area before pulling back down. So we have another area right here where we stalled out, caused new highs. And then down here, as we started breaking out, it basically started taking out all these swing lows here and then here, and caused this huge down drift to the downside. So now that we have those key areas marked up on the longer time frames, we can drill down to the smaller time frames, such as the weekly and or daily. So here we are on a daily price chart of SPG. And we have clearly been stuck in this range between these two key monthly zones, from around $75 to around $50. We know based on experience that the longer a market trades inside of a channel or gets stuck in this range bound or consolidation type mode, that it's likely to lead to a breakout at some time or another. That breakout could be to the upside, that breakout could be to the downside. We simply don't know. But we do know that we have a high probability seasonal trade in the works coming up here around the end of November. In fact, it's been profitable 85% of the time over the last 26 years. So we are favoring the upside, not only because of seasonal data, but if we look down here, if we go back to this monthly chart, we are at key long-term support. We are at key long-term support. So regardless of the fundamentals, this price down here has been respected, and the chart data is clearly telling us that we are in buyers and sellers are indecisive. That likely has a lot to do with what's going on in the world, and once things start to normalize a bit, we're going to likely break out of this channel for a nice trade. Now, if we're favoring the upside, we don't want to get long until we get that confirmation. Well, what is that confirmation? Absolute confirmation to get long is once we clear this area of resistance. Notice that this price action is rejecting at our price zone, our predefined price zone. But if we can get out and clear that area and hold, so we retest a few times, notice that that's also converging here with the 200-day moving average. It's also starting to flatten out, suggesting we could start to have a turning point here. We're looking for a move basically that is equal the width of this base. So that would take us up somewhere around the 100 to 110 mark. What does that also do? It's going to also fill this gap. We know historically that gaps filled a large percentage of the time. That would fill that gap. We like to trade with multiple areas of confluence. So if we take our fib tool and draw from this swing low up to this swing high, which is an area that basically was that last swing high before the market sold off, we would expect price action to come up and retest anywhere here at our 50% retracement. and or the 618, which would also fill this second gap. So we wait to get long around 75. We tuck our initial risk down here on the other side, or perhaps up here, depending on how conservative or aggressive you want to be. And we're targeting around 100 to 110. So we're risking about $10 or so to make about anywhere from $20 to $30. So that's putting favorable risk reward on our side, and obviously the way we want to trade. So go ahead and put this on your calendar, set a reminder. Great thing about the smart seasonal software is we can go ahead and add this to our trade alerts. We can set this trade alert, have this come to our email or SMS text any amount of days that we wish for it to come to us. So we're alerted, basically set and forget, where we don't have to monitor this each and every day. Or you could simply set some price alerts on whatever trading platform you use and know that we have this high probability trade right around the corner. So I hope it helps. We analyze trade ideas like this each and every week across stocks, futures, and currencies. If you have any questions about it, reach out to us at support@seasonalswingtrader.com. Good luck, good trading. We'll see you on the next update.